In this video, we will see how to compute cash and accrual accounting income. The cash method and the accrual method, also called cash basis and accrual basis, are the two methods of keeping track of a business's income and expense. The main difference between accrual basis and cash basis of accounting is the timing, that is, when revenue and expenses are recognized. Under the cash method, revenue is recorded when cash is actually received, and expenses are recorded when they actually pay out cash. The cash basis of accounting is less accurate. It is not in accordance with generally accepted accounting principles, or GAAP. Under the accrual basis of accounting, revenues are recognized when they are earned, rather than when cash is received. Likewise, the expenses are matched with revenues when those revenues are generated, though cash either is paid or not. When using the accrual basis of accounting, the revenues and expenses are recorded in the particular period they pertain to, irrespective of whether cash has been actually received or paid in that period. The accrual basis of accounting produces more accurate financial information in any time period. It is in accordance with generally accepted accounting principles. Let's look at an illustration to see how to compute net income under the cash and the accrual basis of accounting. The data related to revenues and expenses of Calcis Industries are provided. We are required to compute the net income as per the cash basis and the accrual basis of accounting. Under the cash basis, the revenues or expenses are recorded only when there is an actual receipt or payment of cash, irrespective of the period the revenue was earned or expenses were incurred. Here, Calcis collected $125,000 from its customers in year 2, of which $46,000 was for service performed in year 1. Though the revenue pertains to year 1, the receipt of $46,000 was in year 2. Therefore, the entire receipt of $125,000 must be included in the revenue of year 2. During year 2, the company performed services worth of $48,000, but the amount will not be received until year 3. Since cash is not received in year 2, $48,000 will not be included in the revenue of year 2. Thus, the total revenue for year 2 under the cash basis is only $125,000. The company also paid $80,000 toward expenses in year 2, of which $33,000 was for services performed in year 1. In this case, though a portion of expenses pertained to year 1, the entire amount of $80,000 is recorded in year 2 as the payment was made in year 2. In addition, Calcis incurred $48,000 of expenses in year 2, which will not be paid until year 3. Since the payment of $48,000 is not made in year 2, it will not be recorded as expenses in year 2. Thus, the total cash paid for expenses in year 2 is $80,000. By deducting expenses from revenues, we arrive at the net income of $45,000 under the cash basis of accounting. Under the accrual basis, revenues are recognized when they are earned, rather than when cash is received. Calcis collected $125,000 from its customers in year 2, of which $46,000 was for services performed in year 1. As per the revenue recognition principle, $46,000 would have been recorded in year 1 when the company performed the service. Therefore, out of $125,000, the company records revenue worth of $79,000 in year 2. In addition, Calcis also performed services worth $48,000 in year 2, which will not be received until year 3. In this case, Calcis records revenue worth of $48,000 in year 2 when it performed the service rather than in year 3 when it receives the cash. Therefore, the total revenue earned in year 2 amounts to $127,000. Calcis also paid $80,000 for expenses in year 2, of which $33,000 was for expenses incurred on account in year 1. As per the expense recognition principle, expenses are reported in the same period in which it recognizes the service revenue. Therefore, $33,000 will not be recorded in year 2 as it would have already been recognized in year 1. So, the remaining amount of $47,000 is recorded as expense in year 2. In addition, Calcis incurred $48,000 of expenses in year 2, which will not be paid until year 3. Or according to the expense recognition principle, $48,000 will be reported in year 2, though the cash will not be paid until year 3. Thus, the total expenses incurred in year 2 are $95,000. By deducting expenses from revenues, we arrive at the net income of $32,000 under the accrual basis of accounting. Note that the net income computed by the accrual basis is more accurate than the net income under the cash basis of accounting.